Hi, my name's Adam. Welcome to the channel. In this video, we're going to talk about how to use your RRSP, your Registered Retirement Savings Plan, to buy a home or build a home. So if you're looking to buy or build a home and you haven't owned a home, or your partner or common law partner has not owned a home in the last 4 years, you probably will qualify for what's called the Home Buyers Plan, the HBP. So the Home Buyer Plan allows you to pull up to $35,000 each out of your RRSP to use for the purchase or build of a qualifying home. You can also use the Home Buyer Plan for a disabled person that's related to you. So either for yourself or someone that's related to you that qualifies for disability. So to use your RRSP to buy a home, the money has to be in the RRSP for at least 90 days. So if you're writing an offer on a home right now and you're thinking, hey, I can use this, you're probably too late because it does have to be invested and in your RRSP account for at least 90 days to qualify for the Home Buyer Plan. So again, your spouse or common law partner cannot be a homeowner for the last 4 years. Okay, so that's qualification number one. And the money has to be in the RRSP account for at least 90 days. If you qualify under those two, then you can pull up to $35,000 per person. So you and your spouse or common law partner, $35,000 each to use for the purchase or build of your new home. Now, it used to be $25,000. In March of 2019, they increased the Home Buyer Plan amount to $35,000. If you have a locked-in RRSP from an old work pension plan or a group RRSP at your current employer, those may not qualify for the Home Buyer Plan. So a locked-in RRSP will almost never qualify for the Home Buyer Plan. Group RRSPs are about 50-50. A lot of them that we see do qualify, but just check with your plan administrator or HR department to see if your group RRSP could qualify for the Home Buyer Plan. If it doesn't, remember, then you need to set up your own individual RRSP. Money needs to be in there for at least 90 days. So the Home Buyer Plan is a great tax strategy and a great planning tool to help you, get some tax breaks up front and also to save money for a home purchase. So I'll get more into the tax side of things and the benefits of that further down the road in this video. But I first want to talk about repayment. So you've taken out money, let's say the $35,000 from the Home Buyer Plan, okay? How do you repay? When do you need to repay it? Let's go through that. So repayment of the Home Buyer Plan starts 2 years after you take the money out. So if you were to take out your $35,000 out of your RRSP for the Home Buyer Plan today in 2021, repayment wouldn't have to start until 2023. So you have a bit of time. That basically allows you to get the money out, buy your home, get settled in, get your cash flow and budget going, and then start to pay it back. When you pay it back starting 2 years after, you have to pay 1/15 of whatever amount you took out. So just take whatever the total amount that you took out of your RRSP and divide it by 15. That's how much you need to pay back every year to your RRSP so that that amount doesn't become taxable income for you. So for simple terms, let's say you took out $15,000 out of your Home Buyer Plan. That means every year, 2 years after you take it out, you have to pay back $1,000. But what happens if you don't pay it back? That $1,000 is added to your income in that calendar year. So let's say fast forward to 2023, you have to pay $1,000 back to your RRSP for your Home Buyer Plan. Let's assume you made $50,000 that year and you don't pay back any money or put any money into an RRSP. They will add that $1,000 to your income and you will owe taxes accordingly. So, instead of making $50,000 on paper for taxes, you will then make $51,000. So that is an option, and there's actually some tax planning strategies around that, which I'll cover here in a few minutes. Now, if you want to start paying it back right away, you can do that. So any payment that you make to your Home Buyer Plan before that 2-year mark will just reduce the amount of payments that are due. So again, simple math here, let's say you took out $17,000. And in the first year, when no payments were due in 2022, you paid back $2,000. So of the 17, you've paid back 2, you have $15,000 owing. They are now going to take that $15,000 and split it over 15 years. So you'd owe that $1,000 still. So any amount that you pay back to your Home Buyer Plan before the 2-year mark will just reduce the amount that you pay over the 15 years from there on out. And one key point here is repayment to your homebuyer plan through deposits to your RRSP does not affect your contribution earn because you're not making new contributions, you're making a repayment. So if you have a $30,000 RRSP contribution limit and you're paying back that $1,000, it's not going to affect your contribution earn because again, you're not making new contributions. Now, let's say in the calendar year, you made $5,000 of RRSP contributions. There's two ways you can go about this going forward. You could allocate all $5,000 to your home buyer plan, which would reduce future payments accordingly. Or you could allocate your $1,000 that you need to allocate for your home buyer plan. And then the other four could be a regular RRSP contribution, which would reduce your taxable income by $4,000. So you can do it either way. Now, the strategy around this, if you're in a lower income tax bracket, so if your income's lower or you know your income is going to go up over time, you may want to look to pay back your home buyer plan faster because yes, you don't get the tax break now on that extra $4,000, but down the road when you make that $4,000 deposit down the road, you're going to get a larger tax break. So again, if your income's going to go like this over time, maybe you're a school teacher, which, usually their incomes go like this and then they cap out. Well, if you know you're going up over the next few years, maybe if you're able to, pay down your home buyer plan faster so that future payments down the road, 5, 10, 15 years down the road, are actually allocated to reduce your income because you've already paid off your home buyer plan early. Now with RRSP deposits, as you know, you can make an RRSP deposit until the end of the year or the first 60 days of the following year and use it for the previous year. Same goes for home buyer plan. So if I have an amount due of $1,000 in 2023, I can make that payment anytime during 2023 or the first 60 days of 2024 and use it for my 2023 taxes or towards a home buyer plan for 2023. So I want to go through a few advantages of using a home buyer plan. So there's two key advantages that I see. Number one is there's no withholding tax on withdrawals. So if you were to pull out $30,000 from your RRSP, there would usually be a 30% withholding tax. So quite punitive, you'd only be left with $21,000 to work with. But with the home buyer plan, there's no withholding tax. So you get the full $30,000 out into your pocket to use for a home purchase. Okay, so that's number one. The second advantage is you're able to use an RRSP deposit and down payment money and just compound it and allow it to work for itself. Let me give you an example. Let's say you're talking about buying a house, maybe in 6 months from now, and you have $25,000 in cash in your bank account put aside. Let's say you put that $25,000 into an RRSP and you fell into a 30% tax bracket. That's going to give you $7,500 tax refund, okay? So now you've invested $25,000 and you've gotten back $7,500. Now, let's say you take that $7,500 and reinvest it into your RRSP. So let's say in January, you put money into an RRSP and you do your taxes a couple of months later and you get a refund of $7,500. Let's say you put that right back into your RRSP. So now you have $32,500 in your RRSP. So you started with 25, over a few months, you've grown that to $32,500 just through some tax planning, okay? Now let's fast forward 90 days past that last deposit. You can now pull out that full $32,500 from your RRSP under the home buyer plan if you qualify, okay? So now you've taken your $25,000 down payment and increased it to $32,500. So right there, that is just a huge way to increase the ability you can use for a down payment. Now, fast forward down the road, you've put that additional $7,500 into your RRSP. That's gonna give you a tax break or tax refund of just over $2,000, which actually works out to about your first year required repayment to your home buyer plan. Or maybe you wanna use it for rentals for the house or whatever it is. So in essence, you've turned your $25,000 into almost $35,000 just through some basic tax planning and using the home buyer plan. Now, what happens if you don't make repayment of the home buyer plan requirement? So going back to our example where you had to pay $1,000 every single year, and I touched on this already, but if you don't make any payment back, that $1,000 payment, it's added to your income for the year. Now, let's go into some tax planning around that. So I'm gonna use my personal example, which was, when my wife and I met, she had some money put aside for down payment for the house, not in an RSP. So we used that almost exact plan that I just discussed. We put a bunch of money into an RSP, got a quick tax refund, put that into an RSP, and really built up our down payment, okay? She got the tax break. She was working full-time as a nurse at that point, making good income. So she was in a higher tax bracket. Now, fast forward 8 years later, she's having to repay back that home buyer plan, but she's in a much lower tax bracket than she was when she was a full-time nurse, okay? So that tax spread is beneficial for us. So right now, it actually makes sense from a tax perspective. We don't pay back her home buyer plan. We use that money. So let's say her repayment is $1,000 a year. We're better as a family, for tax planning wise, to take that $1,000 and instead of repay back her home buyer plan, let's say she's in a 22% tax bracket, we'll take that $1,000 and put it into my RSP in, let's say, a 30 or 35% tax bracket. So we're creating a bit of a spread on the taxes, which put more money back in our pocket. We're paying less tax to the government. So that's a huge benefit. So again, if there's a scenario where you can pull money out of a home buyer plan, and when it comes to repayment, if you fall into a low tax bracket, or maybe you're not working any longer, or a zero tax bracket, don't feel like you need to pay this back. This may make the most sense to not pay back and take as income. So talk to your tax professional about that, or your certified financial planner, to get some tax planning around that to see what makes the most sense for you. So there's our long-winded summary of a home buyer plan. There's a lot of information that goes into a home buyer plan. We'll throw some links below as well, Canada.ca, around the home buyer plan, just how it works if you qualify. But again, this video gives you a lot of the tidbits of what it is, how it works, how to apply, and then some tax strategies around how to use it effectively. So there really is ways to use a home buyer plan to your advantage. So make sure, if you're in a position to buy a house and you would qualify for the home buyer plan, make sure, if it makes sense from a tax perspective, to really maximize the home buyer plan. It can be really beneficial for you. So thanks so much for joining us today. If you haven't already subscribed to the channel, please do so and click the notification bell. Next week, we're doing a whole 5-video series on what happens to your RSP when you retire. So we're gonna go through some different scenarios and how to effectively use your RSP in retirement. So today we talked about it, kind of pre-retirement, buying a home, buying your first home, or at least qualify for the home buyer plan. Next week, we're gonna talk more about how to use it, leading up to retirement, using it into retirement, and maybe a few times when you wanna use it prior to retirement, not including the home buyer plan. So join us for that. And if you enjoy these videos, make sure to hit the thumbs up button. That really does help get our videos out to more people, and we really do appreciate you watching. Thanks, have a great day.